Which one of these is the best growth stock to buy? Is it Coinbase, Carvana, C3.ai, or DraftKings? I'm going to look at these four stocks and answer which one of these four stocks is the best growth stock to buy. I'm going to do that in this video looking at four different metrics. So let's get starting with revenue growth. Of course, Coinbase, look at this explosive growth for Coinbase in the earlier parts of the pandemic. It grew revenue over 400% as everybody and their cousin started to trade cryptocurrencies, and that was a big tailwind for Coinbase. But that has turned into a headwind as it experienced negative 59% revenue growth in its most recent year, as cryptocurrencies are not as popular as they were last year and the year before that. Meanwhile, DraftKings revenue growth of 72.87%, and the company has capitalized on adding new markets. Remember, it's a gaming company, so it needs to get approval in each new market, each new state that it wants to enter. And it's made really good progress in terms of adding new states for sports books. It hasn't made as good progress in terms of adding iGaming. So those are two separate approvals that DraftKings needs to get. It's been getting sportsbook approvals. It's up to like 17 states now, including Ontario, Canada, but it's not. It's only in 5 states in terms of iGaming. So that side is harder to come by. And then we have Carvana that was experiencing very explosive growth in the earlier stages of its growth cycle, and that has slowed down to 6.17% in its most recent year. And Carvana's troubles have been well publicized. The company both buys and sells cars, right? So during the earlier stages of the pandemic, used car prices exploded, and Carvana was paying higher prices to buy these cars. And at first, it was okay because it was able to sell them at higher prices too. But now that consumer demand for used cars is coming down, Carvana still has all that inventory that it paid really high prices for. So it's in a bit of a dilemma right now. And then we have C3.ai, the company that uses artificial intelligence to help enterprises improve their performance. And it's been getting a big boost from the launch of ChatGPT. And C3.ai is going to launch its own artificial intelligence infused product. It says in the spring of 2023. So any moment now, it could be launching its own product. And 38% revenue growth for C3.ai. So four different companies, all in different industries, experiencing or used to experience explosive growth and are expected to be in the growth stage of their business over the next several years. And this is their history for now, and this could all change in the rest of 2023 into 2024. The next metric I wanted to look at is cash flow from operations to sales. I wanted to see how good these companies are or how bad they are at turning sales into cash flow from operations. And looking at over the trailing 12 months, they're all negative. They're all negative. Coinbase in the last 12 months has operated under a negative 49.6% cash flow from operations. Carvana at negative 9.73%, and it has been improving. And DraftKings at negative 27.92%, and also has been improving. And C3.ai at negative 58.46%, and is moving in the wrong direction. I also wanted to look at the operating profit margin over the trailing 12 months. So this takes company's sales and it subtracts all of their operating expenses to get to operating income. Then it divides that operating income by sales to get the operating profit margin. And for all of these companies, again, they're negative in this metric as well. Coinbase going in the wrong direction and negative 83.57%. Carvana also going downward, negative 10.95%. This is expected to keep going downward as it unloads that excess inventory it now has at higher prices. C3.ai also moving in the wrong direction, negative 102.6%. The only one moving in the right direction is DraftKings, and at negative 67.48%. The last metric I will compare these four growth stocks on is the forward price to sales ratio, their valuation. And looking at this metric, C3.ai is the most expensive at 7.7. Again, the stock price experienced a boom riding the tailwind of ChatGPT, especially in January. Next is Coinbase at 4.074 forward price to sales. Then it's DraftKings at 2.2, and finally Carvana at the cheapest at 0.059. But that's not, there's a reason Carvana is trading so inexpensively, and it has cash flow problems, it's got liquidity problems, and it's not really a bargain even at that relatively inexpensive valuation. So before I answer which one of these four growth stocks is the best one to buy, I will caution investors that these are all very speculative stocks. You saw they're all negative in their cash flow from operations, negative in terms of their operating profit margins. So they're not profitable and they're losing cash flow, right? So that's not sustainable. So it makes their business models highly speculative. And so don't go into any of these stocks unless you've got a very high risk tolerance. Unless you've got a very high risk tolerance, don't even consider any of these four growth stocks. All right, so for those of you that do have a high risk tolerance and you're deciding between one of these four growth stocks to buy, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Coinbase is the best one of these four to buy. And, part of my answer is informed by the potential. I was saying it's a close choice between Coinbase and DraftKings, but DraftKings is already captured so much of its potential market, right? The online sports betting and iGaming market total, even at its maturity, is expected to be only $30 billion. Only $30 billion. And DraftKings already has one of the leading market shares in the industry, so it doesn't have very much room to expand beyond where it's already at. I mean, it's got room, don't get me wrong. It's got room to grow for several years, but comparatively, compared to Coinbase, which, the cryptocurrency market is just the total market cap of cryptocurrencies right now is roughly around 1 trillion. Used to be around 3 trillion at the peak. So it's at least in a market that has potential to be larger than just the 30 billion for the online sportsbook and iGaming. And so for that reason, I chose Coinbase because it's got, if it does become successful and cryptocurrency becomes entrenched in our markets and it becomes a sustainable long-term asset class, then Coinbase could potentially offer investors a 3x, 5x, or 10x return over the next 3, 5, 10 years if everything works in its favor. Whereas I couldn't say that for DraftKings. I don't think DraftKings has a 10x potential. Regardless of how well things work out for it, I don't think DraftKings has 10x potential, whereas Coinbase does have 10x potential if everything works in its favor. So there you have it. Coinbase is my choice for one of the best, or Coinbase is my choice for the best growth stock out of these four to buy now. All right, so that's all I've got for this video. As always, thank you so much for watching. I really appreciate your viewership. And if you like this video, I'm going to add a few videos at the end of this one that I think you'll enjoy. So please click on one of those and I'll see you over there.